Hello guys. I am Rana Wakazali from Pakistan. We are start the series about taxation and tender qualifying services. We are also run the center with name of Sibwa Tax and Tender Services Center. In this we are providing services about tax and tender and their solution to compensation in tax and qualify the tender, also provide paid short courses. For more detail kindly visit our channel description. Today we are discuss introduction of tax, and for more visit our channel link is below. Let do start. In this video we will discusses these table of content. Definition of tax. Type of tax. General view of different taxes like income tax, sale tax, VAT, withholding tax, and CVT etc. Tax. What is tax? Tax is noun in grammar and its subject is government and object are individual or company of resident, identity personal and investor. Definition. Tax is compulsory financial charges or part of income and profit imposed by the government of concerned state, which collect from residential, identity personals and investors, to regulate and spending to run government and on expenses to fulfill public requirements of state. Concepts which we are discussed. 1. Tax and their types. 2. Islamic concept of tax and their types. Furthermore, we will discuss every tax separately in next coming videos. Now we are learn about type of taxes which we are paid to government. Direct tax. Indirect tax. Other tax. In direct taxes we are includes 1. Income tax. 2. Corporate tax. 3. Withholding tax. 4. Property tax, which is collected by provincial governments in Pakistan. 5. Agriculture tax, which is collected by provincial governments in Pakistan. 6. Professional tax, which is collected by provincial governments in Pakistan. In indirect taxes we will discuss these taxes. 1. Sales tax. 2. Value-added tax. 3. Service tax. After formal taxes we are added one more category is called other taxes which sometime paid direct and sometime indirectly by taxpayer. 1. Capital value tax. 2. Capital gain tax. 3. Token tax. 4. Cutom duty. 5. Excise duty or excise tax. Now, we are learning direct taxes. What is direct taxes? A taxes which is collected from directly to taxpayer by government of state. Taxes are included income tax, corporate tax, withholding tax, federal and property tax, agriculture tax, professional tax, provincial, etc. Direct tax is a tax levied on companies, as well as individuals, that cannot be passed on to another taxpayer. The taxpayer is liable for the tax payment, which is collected directly by the government. Direct tax is progressive in nature. This means that the tax burden increases with income. In other words, an individual who makes a high income will pay a disproportionate share of the tax burden, while someone who makes a lower income will face a relatively small tax burden. What is income tax? Income tax is a tax that is levied on the income of individuals, corporations, and businesses. Income tax is charged on the income earned during a financial year, which begins on July 1st and ends on June 30th of the following year. The tax rates for individuals vary depending on their income levels, while for corporations and businesses, the tax rates are a fixed percentage of their net profits. Income tax is a type of tax governments impose on income generated by businesses and individuals within their jurisdiction. Income tax is used to fund public services, pay government obligations, and provide goods for citizens. In Pakistan, this tax is levied on the income of individuals, associations of persons, AOPs, and corporations. In detail we will make video, in which we are describe complete details of income tax, their registration, their return submission methods and how to pay tax. And rules and regulations. Corporate tax, this is similar to income tax but apply on corporate authorities. Corporate tax is imposed on the profits of corporations at a standard rate decided by government. The tax structure is progressive, aiming to fairly distribute the tax burden across different income groups. Incorporated businesses are taxed on their profits, minus allowable deductions, which is known as corporate income tax. Corporate income tax is a significant source of revenue for governments. Withholding tax. Withholding is an act of deduction or collection of tax at source, which has generally been in the nature of an advance tax payment. Withholding tax is a mechanism through which the FBR collects tax from individuals and businesses on certain sources of income or expenditure. Withholding tax is deducted from various sources of your income or expenditure, such as salary, dividends, interest, vehicle registration, transfer of ownership, property transactions, repaid/postpaid/landline phone bills, and others. Every person and business along with corporate sectors are required to deduct withholding taxes while paying for goods, PKR 75000/year, and services, PKR 30000/year. However, for rental income the limit is increased to PKR 300,000/year. Property tax. Property tax is a tax levied on the value of immovable property, such as land and buildings. In Pakistan, property tax is charged by the local government authorities. The rates of property tax vary depending on the value of the property and the location. Tax levied on the ownership of real estate. Property tax is a tax imposed on both commercial and residential real property like buildings and land. It is also levied on tangible personal property such as inventories, business equipment, and vehicles. Property taxes, which vary significantly among states and localities, are a critical source of revenue for state and local governments as they help fund roads, schools, police, and other services. In Pakistan, this tax collected by provincial governments. Agriculture tax. Tax on income derived from agricultural activities is called agriculture tax. This tax collected directly from taxpayer. In Pakistan, this tax collected by provincial governments. Professional tax. This tax imposed on individuals engaged in specific professions or occupations. This tax paid to provincial government in Pakistan and tax collecting authority give NOC or professional tax certificate for his working in concerned province as professional. It rates will be vary according to value of business and type of business like contractor or goods supplier, etc. Now, direct taxes details are completed and we will describe all tax individually in different videos and their offline and online registration and submission methods.
Now we are learning the types of tax which lies in indirect tax. Indirect tax is a tax that can be passed on to another entity or individual. Indirect taxes are levied on goods and services. The supplier or manufacturer passes on the tax to the consumer, who is the one ultimately paying the tax. The supplier or manufacturer collects the tax and then remits it to the government. Indirect tax, more commonly known as sales tax, is also applicable on supply of goods and provision of services. Sales tax. Sales tax is a tax levied on the sale of goods and services. In Pakistan, sales tax is charged at different rates, depending on the type of goods or services being sold. The standard rate of sales tax is 18%, while it may range to 25% for luxury items, etc. Sales tax is a value-added tax imposed on the sale of goods and services. It is a significant source of revenue for the federal and provincial governments. Under the 18th Amendment to the Constitution of Pakistan, the right to charge sales tax on services has been given to the provincial governments, whereas the right to charge sales tax on goods has been given to the federal government. Consequently, provincial revenue authorities were created to manage and collect provincial sales tax in their respective provinces. Sales tax is a consumption tax levied on the sale of goods and services. Once the tax is added to the sales price of a good or service, it is then charged by the retailer to the end consumer. The retailer then remits that collected tax to the government. Tax jurisdictions only receive tax revenue when a sale is made to the end consumer. Value-added tax. A value-added tax, also referred to as a VAT tax, is a tax on the value added at each stage of the supply chain in the production of goods and services. It is collected on online services in Pakistan, like Daraz.pk. The business in each earlier stage of the production chain is then reimbursed for the VAT by the subsequent business in the chain. The end consumer is the one who ultimately pays the VAT tax. For example, if a product costs $50 and there is a 10% VAT, the consumer pays $55 to the retailer. The retailer keeps $50 and remits $5 to the government. Service tax. Service tax is applied on services, including transportation, logistics, technology, and professional services. Rates of service tax varies depends on status of the taxpayers and type of services. Generally, it is paid to provinces after 18 amendments in Pakistan. Income tax on export of services in Pakistan is 1%. However, the export of IT services is taxed at a reduced rate of 0.25% if registered with PSEB, Pakistan's Software Export Board. In addition to corporate tax, there are other applicable income taxes, including super tax, minimum tax, and tax on undistributed reserves.
After formal direct and indirect tax, we are discussing the other tax and their taxes, which lies in it. Other taxes. Pakistan's tax system encompasses a variety of levies beyond income tax. Taxation in Pakistan is no doubt one of the complicated tax systems in the world. Here's the list of other applicable taxes in Pakistan. Capital value. Tax. The capital value tax, CVT, is a significant tool used by the Pakistani government to generate revenue. The CVT is applied to specific asset categories, including motor vehicles, certain foreign assets, and designated immovable properties. This tax plays a role in the government's efforts to diversify its revenue sources and modernize its tax administration. Capital gain tax. Capital gains tax is a tax imposed on the profit earned from the sale of an asset. In Pakistan, capital gains tax is charged on the sale of immovable property, shares, securities, and other assets. The rates of capital gains tax vary depending on the type of asset being sold and the holding period of the asset. Capital gains tax in Pakistan is levied on profits from the sale of capital assets, which include property, jewelry, artwork, and collectibles, excluding stock in trade, depreciable assets, and personal use items, as defined by the Income Tax Ordinance 2001. Capital gains tax rates vary, and that variance will depend on two factors: one's income level and how long the asset was held. The latter refers to whether it is a short-term capital gain, held less than 1 year, or a long-term capital gain, held 1 year or more. Token tax. In Pakistan, token tax is annual tax paid on private vehicles, varies significantly based on engine capacity and tax filing status. Filers, those who regularly submit tax returns to the FBR, enjoy considerably lower rates compared to non-filers. Similarly, passenger transport vehicle taxes are determined by seating capacity and air conditioning, with filers consistently paying less. This system incentivizes tax compliance, highlighting the financial benefits of filing tax returns in Pakistan. Custom duty. Customs duty is a tax levied on imported goods. It is charged by the Federal Board of Revenue, FBR, at the time of importation. The rates of customs duty vary depending on the type of goods being imported, and they are set by the government of Pakistan. Imposed on the import and export of goods. This tax is intended to regulate trade and generate revenue from international transactions. Excise duty. Federal excise duty, FID, is a tax levied on specific goods and services produced and consumed in Pakistan. FED is charged on a wide range of items, including cigarettes, cement, sugar, beverages, and petroleum products. The rates of FED vary depending on the type of product. Excise taxes, which are levied at federal, state, and local levels, are imposed on the production of specific goods such as alcohol, tobacco, and petroleum products. Now our topics are completed, and kindly visit our channel and channel description for more information and method of taxes. We are thanks to you for watching our video.